Did you know that gold isn't just shiny jewelry or a mere commodity? It's a global economic game changer, and what's happening right now might surprise you. You see, China, one of the world's economic powerhouses, has been in a gold buying frenzy. But what does this mean for you and the global economy? Well, hang tight because we're diving deep into this golden mystery. Jim Rickards has some fascinating insights to share, and we're about to uncover the key points that'll leave you thinking about your financial future. There's been quite a gold rush in the world of central banking this year, and it's making waves in the global economy. According to data from the World Gold Council, central banks collectively snapped up a whopping 125 tons of gold in just the first 2 months of 2023. Now, that's a hefty amount of the shiny stuff, and it's got everyone's attention. Leading the charge are countries like Singapore, Turkey, China, Russia, and India. They're not just buying gold for the fun of it, but they're doing it with a purpose. You see, gold plays a crucial role in diversifying a country's currency reserves. It's like adding a valuable insurance policy to their financial arsenal, something they can rely on when economic storms hit. So, why does this matter to you? Well, it's a sign of the times. When central banks start stockpiling gold, it often means they're not entirely confident in the global financial landscape. Now, let's focus on China's relentless pursuit of gold in 2023. It's been quite the streak, with 9 straight months of gold purchases. Yes, you heard it right, 9 months in a row. But why is this such a big deal? China's gold holdings have now reached a staggering 2,136 tons. That's an immense amount of gold, enough to make anyone's eyes widen. And it's crucial because it's not just about having shiny bars stored away in vaults. It's about power and strategy. China has a history of being a bit secretive about its gold acquisitions. They've been known to underreport their gold holdings, leaving us all guessing about their true reserves. Some experts even believe they have hidden stashes of gold that they're not telling the world about. So, why all the secrecy and the gold hoarding? Well, it comes down to China's plan to become a heavyweight player in the global economy. Having a massive pile of gold gives them financial leverage, a bargaining chip on the world stage. If they ever decide to reveal their true gold holdings, it could send shockwaves through the global financial system. It's like having a hidden ace up their sleeve in a high-stakes poker game. Now, looking back at the gold-buying roller coaster, there was a surprising twist in the plot in March, April, and May when some central banks decided to sell off some of their gold holdings. But don't let that raise too many eyebrows just yet. It wasn't a change of heart, but a strategic move in response to local market dynamics. You see, Turkey, one of the players in this gold game, decided to sell about 160 tons of gold during those months. It might sound like a lot, but here's the catch. It wasn't part of a grand, long-term plan. It was more like a temporary adjustment to their financial strategy. Why, you ask? Well, Turkey had its reasons. Their inflation forecast was a whopping 65%, and that's like a financial storm warning. In times of soaring inflation, gold often shines even brighter as a store of value. So, Turkey decided to cash in on some of its gold while the demand was high, and local market dynamics favored the sale. But here's where it gets interesting. Turkey didn't stick to that path for long. They realized the importance of holding onto gold, especially when economic turbulence is on the horizon. So, they quickly changed course and resumed their gold purchases. They also reinstated gold import quotas, showing a clear intention to get back into the gold buying game. These massive gold acquisitions showed that we might be witnessing a significant shift in the global economic landscape. There are 2 major spheres emerging, one centered around the United States and another around China. It's what experts call a multipolar world, where power and influence are shared among several key players. Now, keep your eyes on the BRICS countries: Brazil, Russia, India, China, and South Africa. They're not just random nations, but becoming increasingly powerful players in this new world order. In fact, their combined share of the global economy has now surpassed that of the G7 countries, including the US. But here's where gold steps into the spotlight. These BRICS countries are looking to reduce their reliance on the US dollar, which has been the dominant global reserve currency for about a century. How? Well, they're turning to gold. The BRICS nations are also developing alternative payment systems that don't depend on the dollar. Gold's intrinsic value and global acceptance make it an ideal asset to back these new systems. But before we continue, we want to thank you for watching this far. Speaking of assets making a comeback, gold-backed exchange-traded funds have seen a remarkable resurgence in March. This strongly indicates how investors feel about the world's current state. You see, a cocktail of factors stirs up this renewed interest in gold. First off, there's the weak economic news. U.S. manufacturing activity, for instance, has taken a hit, contracting at a rate we haven't seen in 15 years. Then, there's the persistent issue of inflation. prices keep on rising, and it's putting a squeeze on everyone's wallets. When you're faced with the eroding purchasing power of your money, gold starts looking mighty attractive. And let's not forget about geopolitical tensions. Investors often turn to gold as a safe haven when the world feels uncertain. Now, gold prices are inching closer to record highs, and that's turning heads. It's like a golden signal that something big might be on the horizon, and people want to be prepared. So, how do we read the signs of a looming global recession? Well, one of the big flashing warnings is the state of manufacturing. When it shows weakness, it's like a canary in the coal mine, signaling trouble ahead. Take the US, for example. Its manufacturing activity has been on a downward spiral for a while now, with the latest data showing a level we haven't seen in 15 years. Now, history tells us that when manufacturing takes such a hit, it's often a red flag for a recession. And here's another piece of the puzzle: the Federal Reserve's actions. They've been hitting the brakes, trying to slow down economic growth. It might sound like a good plan, but it comes with risks. You see, over the past 7 decades, whenever the Fed hit pause on its rate hikes, a recession followed 75% of the time, with an average delay of about 6 months. This is where Jim Rickards comes in with his valuable advice. In times of economic uncertainty, he emphasizes the importance of gold as a reliable hedge. His recommendation is to consider allocating 10% of your portfolio to gold. It's a prudent move, and here's how you can break it down: 5% in physical gold, the real deal you can hold in your hand, and another 5% in high-quality gold mining stocks, mutual funds, or ETFs. Why this split? Well, physical gold provides that tangible security, a piece of history you can own. On the flip side, investing in gold-related stocks and funds allows you to tap into the potential growth of the gold market. So, what's the bottom line for you? Jim Rickards advises having that 10% gold allocation as a safeguard. Gold has stood the test of time as a store of value, and in uncertain times, it's smart to have it in your financial toolkit. So, to sum it up, staying informed about the ever-changing economic landscape is crucial. It's like having a compass in uncharted waters. It helps you navigate the twists and turns. Now, here's the question for you: are you ready to safeguard your financial future with the wisdom of experts like Jim Rickards? Feel free to share them in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about how to safeguard your money during economic turmoil, I highly recommend watching this terrific video. Just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.